When a company drops its quarterly results, you usually expect some pretty standard numbers. But every once in a while, you get a report that tells a much bigger story. A story about huge profits, really bold strategic moves, and, well, a little bit of fine print that kind of changes everything. So let's dive into the latest numbers from Bajaj Holdings and Investment. Okay, first things first, the headline number. For the 9 months ending in December, Bajaj Holdings posted a massive consolidated profit of over 7,000 crore rupees. I mean, that is a gigantic figure, no matter how you slice it.
But here's the thing about numbers this big. The real story is never just on the surface, right? It just makes you wonder, where did all this profit actually come from? And is there a catch? Well, that's exactly what we're going to unpack.
To really get a handle on what's behind that big number, we first need to understand what this company actually does. So let's start right there. So as its name pretty much tells you, Bajaj Holdings, or BHIL, isn't out there making scooters or selling insurance policies directly. Nope, it's a holding company. Think of it more like a strategic investor. Its whole job is to own shares in other companies, a lot of them in the Bajaj family, and make money from those investments. And here it is, you can see it for yourself, straight from their consolidated financial results. Now, consolidated just means it lumps in the performance of the whole group of companies it has a stake in, and you see it right there highlighted, that massive 7,061 crore figure.
But a number that large, especially when you look at what they've done in previous years, it just screams that something out of the ordinary must have happened. And it did. It's something accountants have a special name for, an exceptional item.
So what in the world is an exceptional item? Honestly, the easiest way to think about it is as a one-off event. It's not part of the regular day-to-day business of collecting dividends. It's kind of like getting a huge unexpected bonus at work. I mean, it's fantastic, but you can't really count on it happening again next year. So how do we track down where that bonus came from? Well, we've got to look at the standalone results. That's just the parent company's books. And boom, there it is, clear as day. It's listed right there as an exceptional item, and the note says it came from selling shares in Bajaj Finserv. And the profit from that one single transaction? Almost 2,000 crore rupees. Just think about that. A huge chunk of the total profit came from this single one-time event. So the big takeaway here is this wasn't just a great quarter of normal business. It was absolutely supercharged by a massive asset sale. The report even gives us the nitty-gritty details. On June 6th, the company sold a massive block of 10.4 million shares in one of its key companies. That sale is where that huge gain came from. But what they did with the money? Well, that's even more interesting. I mean, cashing out a profit of nearly 2,000 crore is one thing. But where did that money go? This wasn't just about pocketing some profits. No, this was about funding the next big move. And here you can see the two sides of their strategy, laid out plain and simple. On the left, you've got the sale of about 2,000 crore worth of Bajaj Finserv shares. And on the right, a much, much bigger purchase, an acquisition of over 16,000 crore worth of shares in Bajaj's insurance businesses. So you see, this wasn't just a simple sale. It was a huge strategic pivot. They used the cash from one major investment to help fund this enormous new bet, seriously doubling down on the insurance sector. This is a company making a very, very clear statement about where it thinks the future growth is. So we've got a huge profit, driven by a big sale, which then funded an even bigger strategic purchase. It's a pretty clean story, right? Well, not quite. This is where we have to look at the auditor's report, which is basically the corporate version of a report card. Okay, so before we see that report card, you gotta understand there are two versions. The standalone results are just for the parent company, BHIL. But the consolidated results, that's the one that combines the finances of the whole family of companies BHIL owns. It's the big picture view. Now, for the standalone results, so just BHIL on its own, the auditors gave it a clean bill of health. A thumbs up. No problems, nothing to see here, everything checked out perfectly. But when it came to that big picture view, the consolidated report that rolls everything up, the auditors couldn't give it a completely clean opinion. They had to raise a flag. Now, in the accounting world, this is what's called a modified conclusion. It's the auditor's formal, polite way of saying, hey, we've looked at everything, but there's this one specific issue that's stopping us from signing off without any reservations. It's a pretty big deal. And here's the exact wording right from the report itself, signed by the independent auditors. They say it directly and formally. So this isn't just a suggestion. It's a formal change to their conclusion on the company's financials for the entire group.
So why the flag? What happened? Well, the report explains that for one of its key international companies, Bajaj Auto International Holdings, the group was actually missing the financial data for a period of over 4 months. And without that data, the auditors just couldn't verify the full picture, which forced them to modify their conclusion.
Okay, so let's zoom out and try to put all these different pieces together. What's the big takeaway from this really high-stakes quarter? All right, here's what we've really learned. First, that massive profit was powered by an exceptional one-time sale. Second, BHIL is making a very clear, very decisive, and let's be honest, a very expensive bet on its insurance businesses. Third, that auditor's note is a great reminder of just how complicated it can be to manage and report on a giant global group. And finally, and this is probably the most important part, the headline number is just the start of the story. The real juicy insights are always hidden in the details.
And all of this leaves us with one final, really crucial question. This wasn't just a financial transaction. It was a declaration of intent. Selling off a piece of one crown jewel to buy an even bigger stake in another sends a really powerful signal. So